Hey guys, welcome back to another video. Today we're going to be checking out the Raiz Invest platform. Raiz is a company that allows people to get easy access to the stock market through micro investing. They were previously known under the Acorns brand, which was a US based company, but have since branched out and recreated their brand as Raiz for the Australian version of Acorns. So it's a very unique platform in the sense that they allow you to buy portions of stocks and ETFs, meaning that you don't need large upfront capital to get involved into the stock market. They also provide very intuitive and easy ways to save money through their roundup features, as well as cashback through purchasing with their partners, such as retail or online stores and other things like that, which we'll discuss further in the video. So jumping straight into the app here, I'm logged into my personal account that I used a while back. I've since jumped out of the platform and gone for other investment options due to personal circumstance. But during the time that I was invested in Raiz, I had a great experience and also saw some pretty healthy returns, which we'll look into in a bit. So firstly, looking at what we're presented with when we jump in, we're presented with our account value and our amount invested over the last 30 days. If we just scroll down here, we're also presented with a number of different options, such as ability to quick invest, roundups, and our history, so our transaction history with the platform. Here you can see that I sold out $12,161 worth of assets, and that was on the 26th of June 2019. So that's when I pulled my money out of Raiz. And if we go down here, we can also see dividends that have been processed. So as a result of being invested in the Raiz Managed Fund scheme, you will receive dividends on behalf of the products that you've invested in, and they are processed and reinvested into your account. Now, if we just have a look at the roundup feature that Raiz offers, for those who are unaware of what a roundup is, it's essentially a way that Raiz encourages you to save through rounding up your purchases. So an example would be, as we can see down here, is if you were to buy a coffee for $3.44, Raiz would round up the transaction to $4 and invest 56 cents. So instead of, spending $3.44, your total transaction amount will be $4, but 56 cents of that will go into your account for investing. So over time, you can see this would accumulate and eventually it would just build and build and build. And as you're invested, you'll see returns on the roundups you've invested into your account, and it can accumulate to quite a large sum. So just note that it's not actually Raiz providing those funds. You will be paying the 56 cents, but it's sort of a passive way to encourage you to save without actively making transactions into Raiz itself. For example, here, I originally turned on the feature. I turned it off after a while because I wanted to manage my money in a different way. But as you can see here, McDonald's on the 23rd of the 3rd, 2017, I spent $9.10, and then Raiz took an additional 90 cents out of my bank account and put it into the Raiz Invest platform. And so that's a neat little way that they've added to their application to encourage you to save and invest with them. Now, when you're looking to invest into the platform itself, there are two options you can go with. We've got a one-time and a recurring. I guess you could say that the roundup feature is also a way to get invested, but for argument's sake, when you're doing like lump sum payments, we've got a one-time and a recurring option, and that's under the transfer money option. Also, you should note that this is the web app version, and they do have a mobile app version available for both Android and iOS. So for example, I personally only ever did one-time lump sum payments, and all you have to do is click on the one-time tab, enter 5,000 and click invest. Obviously, you'll need to link your bank account and have the funds available in order for this to go through. And I'd also make sure that you do have the available funds. Otherwise, I believe they do charge something like a $5 processing fee in the event that the account bounces from experience. Additionally, you can have a reoccurring investment, and you can select how frequently you want that investment to go into the platform. This can be great if you want your pay to be deposited into the platform, say proportion 20% of your pay, and depending on how often you get paid, you can select that and then adjust the value that suits your particular budgeting needs. Now, having a look at Raiz Rewards. So this is a piece of their app that allows you to receive cash back in the form of investments. So Raiz has partnered with third parties here to allow you to receive percentage cashbacks on your purchases if you use their affiliate links here. So for example, if we wanted to shop at Adidas, we'd log into our Raiz platform, we click on this link. This would take us to the Adidas store, but we're actually hitting the Adidas store through an affiliate link. And what that allows Raiz to do is track that we've clicked through their link. Raiz would receive a percentage cashback from Adidas, but they'd also take a percentage of that and provide it to you and invest it into your account. So you will not be charged more for doing this. It will be the same price, but you're essentially just generating money by using referral links through Raiz. So if we just have a look at some of the terms and conditions here for Adidas, we can see that we've got the promotion, how long it runs for, and then we've also got the start time. Now, if we have a look at the customer reward, so this is the important part, the third-party retailer will contribute an amount of money for investment into your Raiz account equal to 5.6% of the purchase price of eligible product of $5, net of GST and any delivery administration fees, or more when paid in full. So it will be 5.6% of the total purchase price. So for example, if you purchase an eligible product that was $100, they would invest $5.60 into your Raiz account. So quite a neat way for you to earn additional money and invest it whilst shopping online. Now, since I started, there wasn't that many partners, but now you can see there's quite a large variety of partners available here. And some of these third parties are probably people you already shop with. But make sure you check out the terms and conditions to find out exactly how much will be invested into your account, so you're not shocked when something doesn't come through as much as you expected. Now, jumping over to Raiz Super, we can see they also offer a super-based product. Now, I haven't used Raiz Super myself, but it's another thing if you're interested in, you can look into a bit further. This is kind of separate to the whole Raiz Invest platform, but is a super fund available for those who feel is the right product for them. I encourage you to read through the product disclosure statement and see all of the details associated with it, because I actually haven't invested in the product myself. Now, for those of you who haven't signed up yet, I'll leave a referral link in the description below, meaning if you invest in the platform, Raiz will automatically add an additional $10 to your investment. And once you've signed up, and if you have any other friends who would be interested in the platform, feel free to share your own referral link. You'll get one once you've signed up and done all the right processing, and you will also receive $10 for each friend that you refer. So it's a neat little way to, gain exposure to the platform, but also be rewarded in doing so. Now, if we just have a look at a bit of a history that I have on my account, we can see that overall I made $2,095 and had a 16.97% return on my money. My total invested amount was $10,003, and I had $710.87 in dividends. And as we saw before, my total withdrawn was $12,098. And we have $63.89 in fees. Now, all these transactions are completely transparent and documented within your history tab, and you can see all the way back all these dividends and fees that have been processed and applied to the account. So 16.97 is pretty good. I believe I was in the platform for around 2 years. So if we just head down to the bottom here, we can see that I originally invested on the 21st of March 2017, and I bought in at $500 worth of stock. When I originally bought in, I had my portfolio set to, I believe, moderately conservative. And as soon as I did that, I'm like, oh, maybe I can consume a bit more risk. And so I had my account rebalanced, and we'll discuss the different portfolios available a bit later. And then I ended up buying an additional 500, so that brought myself to 1,000, put another 2,000 in, and then I put more, and then I eventually made my way all up to 10,000 after this final buy. And since that point, I didn't actually put any more of my own capital in, but just let the balance grow through dividends and obviously capital gains over the period of time in which I was invested in. And then the 26th of June 2019 was when it was sold. So yeah, just a bit over 2 years invested. It was a 16.97% return, which is pretty healthy. Ideally, it would be slightly higher with 2 years, maybe 18%, but definitely not complaining with the total net gain here of over $2,000 during that time. So Raiz definitely treated me well with the investments that I jumped into, and I had my portfolio set to moderately aggressive over the large proportion of the time that I was invested in. Now, if we just click on the portfolio tab here, we can see exactly what products are available through, or I guess portfolios are available through Raiz. They offer 6 different portfolios at the current moment, it's ranging from conservative all the way to aggressive, and they also have an emerald based portfolio. Now, conservative represents a portfolio that is the most risk averse, and aggressive being the most risk, having the highest risk appetite. So conservatives is probably for those who are a bit more worried about losing capital and preserving their capital, as opposed to those who want to go with aggressive, who will seek higher gains, but also risk in the event of a market downturn will be hit or exposed more. So the Emerald portfolio is kind of a standalone platform or portfolio in the sense that it looks to or seeks to invest in socially and environmentally friendly companies. And in doing so, it may hinder your returns to a certain degree, but you know that you're investing in socially responsible and ethically responsible companies. So there can be peace of mind through that. So if that's something you're interested in, I recommend looking into the Emerald portfolio a bit more. So this is actually a calculator that Raiz have implemented to give you a bit of an understanding or an idea of the sort of returns you can expect with the different portfolios that they offer. With me being at the current age of 21, if I had to invest $100 per month, and as I age, you can see that value increasing. Now, the important thing to note here is the large font value is the total amount or of value that you have, and the one in brackets is the interest earned on the capital. So as we scale this up, we can see both figures increasing, and this isn't actually an exponential gain because it's compounding the interest earned, and you're eventually earning interest on the interest that you earn, if that makes sense. And if we scale this all the way out to 40, we can see with $100 invested each month, as you can see by the monthly figure there, when I'm age 40, which is 19 years from now, I can expect to earn $11,411 in interest. And then the total value of my initial $100 investment and then $100 after that will accumulate to $33,711, which is obviously a nice gain, but definitely not as aggressive as some of the other portfolios available. So if we just do a similar comparison against the aggressive portfolio, we can see that we can expect $23,290 in interest and a total amount of $45,692, which is obviously significantly greater than the conservative portfolio. But again, the risk associated with each are different, and that's why the return is quite larger with the aggressive as opposed to the conservative. And we can adjust these figures to increase the monthly figure. So as soon as we pull this, we can pull this all the way up to say $2,000 a month, and those values start growing quite large very quickly. So at the age of 40, which is 19 years from now, I can nearly expect $1 million if I was under the aggressive one, and then conservative is 680,000. And then you can see as I click through these, it slowly gets bigger as I go to the more aggressive section. And then Emerald is somewhere in between the conservative and aggressive side. They also give you a breakdown. So if we just head over to, if we just stay on the aggressive portfolio, they give you a breakdown of exactly what your money is being distributed in. So they slice up your capital and push it into different areas based on the portfolio that you select. Now, the more conservative portfolios will head into or have larger portions allocated to government bonds because of security and low risk associated with that particular investment vehicle, whereas the more aggressive portfolios will have higher allocations to domestic and international equities. And you can see the distribution here of percentages associated with each. And you can also identify exactly, it says here, this portfolio seeks to provide investors with capital appreciation. And if we head over to conservative, this portfolio seeks to provide investors with current income and preservation of capital. So two different investment objectives for two different investors. And that depends on a variety of, variables depending on your current circumstance, income, risk appetite, and that sort of thing. Now, if you were just to navigate over to the settings tab, this is where you can adjust the spending accounts. So if you wanted to set up the roundup feature, you'd be adding your debit card here through here. The funding account will be used to fund the platform with your capital to invest. They also offer other products such as Raiz Kids, which is a way in which you can set up little, portfolios for your kids as they're growing up and encourage them to save. It's a similar product to the overall Raiz Invest feature, but allows you to set up accounts in your kid's name. Obviously change password, change your PIN, get statements for tax. So during tax time, you'll need to report your capital appreciation and dividend returns. So these are important to either give to your accountant or look through yourself if you were to lodge your own tax returns. And then there's other things like get help and the legal part of the Raiz Invest platform. Now, if we just head over to their product disclosure statement to get a bit more insight into exactly how the funds are being allocated and invested. Here we can see this is their PDS, and firstly, just going through how the Raiz Invest Australia Fund works. We can see here, Raiz is a micro-investing product that offers an easy way to regularly invest either small or large amounts of money using the app on your mobile phone or the website. The fund is registered managed investment scheme. If you apply to participate in Raiz, you apply to receive an interest in the fund known as Raiz Investment account. The minimum investment amount is $5. You can make regular contributions to increase the value of your Raiz Investment account. You can withdraw all or part of your investment at any time, and your investments are held beneficially for you, subject to any fractional interests which are pooled. If you apply, we establish one interest, one Raiz Investment account for each investor at you. So you can feel free to read through all of this. I personally have had, as I think I mentioned before, great experience with Raiz. I believe it probably takes a couple of days. Once you attempt to fund the account, it'll take a few days for them to process that transaction and allocate the assets to your name. In addition to that, when you sell, there is a waiting period before those assets are liquidated. It's not instantaneous and the funds won't be available immediately, so that's something to keep in mind. But they eventually do liquidate those funds once they're able to sell those assets to on the Australian Securities Exchange, and you will receive those funds in your nominated bank account. Now, if we just head down here, there are other important information here that I encourage you to read through if you are looking into this platform, but I'm just going to go give a brief overview of some of the other important things that I think is worth mentioning in this video. So if we just head down here, noting that there is no switching fees. So in the event that you change your portfolio from a conservative to a more aggressive portfolio or vice versa, you will not be charged any switching fees in doing so. But as it notes here, there is applicable buy-sell spreads. So that means in the event that there is a spread on the buy-sell order, you will pay the difference associated with that. Usually, considering how liquid the ETFs that Raiz is invested in, the buy-sell spreads shouldn't be that large. So I wouldn't stress too much about that, but definitely something to note. No trading fees. So making contributions and withdrawing, there are no fees associated with that, which is great. So feel free to contribute as regularly as often. So the roundup feature is great because they don't charge any fees on small, contributions. Now, this is probably the most important piece, which is how we invest your money. So Raiz looks to allocate your funds to ETF-based products. So if you're unaware of what an ETF is, I've actually done a video on it previously, and I'll leave a link, or it should come up in the top right-hand corner of your screen now. Feel free to check that out if you want to know a bit more. But essentially, it is a packaged security that contains multiple stocks, or it doesn't have to be stocks. It can also be bonds, packaged up into one security. So here we can see that they've got a number of ETFs listed, and they will all have different asset allocation weightings based on the portfolio that you select. So firstly, we've got the STW ASX 200 ETF, which is an exchange-traded fund that tracks the top 200 Australian companies. We've also got an Asian large-cap stocks ETF, European large-cap stocks, US large-cap stocks, Australian large-cap responsible investing stocks, global large-cap sustainability leaders, Australian government bonds fixed income, and Australian corporate bonds fixed income, Australian money market cash. So they're all ETF-based products, and they all aim to provide different things. So the bonds and the Australian money are all fixed income, whereas something like, the US large cap would look more to find capital appreciation as opposed to fixed income. And they've got links to all the websites here, BlackRock as well, Standard & Poor's, and Russell Investments, who are the ETF providers themselves. And that's all 9 that they look to invest in. But each portfolio, as you can see here, we're looking at the moderately aggressive portfolio, may not invest in all of the 9 available ETFs. So because this is a moderately aggressive portfolio, there is less emphasis on bond ETFs and more emphasis on equity-based ETFs. As we can see here, 43.6% of the asset allocation is associated with the Australian large cap stocks, and a measly 3% with Australian government bonds, and 3% with the money market, and with a decent amount in Australian corporate bonds. And they all adjust based on the particular portfolio that you've chosen to go with. Now, just heading down to the fees and costs associated with Raiz. Obviously, there's going to be fees to support the company itself. We can see here, scrolling down, we've got the exact breakdown of the fees associated with the account. So all of these nil fees associated with termination, withdrawal, contribution, and establishment. But when we go down to management costs, we can see that the fees start to come into play. So account fees, if your account balance is less than 10,000, you'll pay no account fees. But if your account balance is equal to or greater than 10,000, you'll pay 0.275% per annum on your investment. So that obviously becomes a larger amount the more you invest, because it's a percentage-based fee. Then we've got the underlying issuer fees. This refers to the actual ETF providers themselves. Because Raiz doesn't actually package up the securities and provide the investment, they're actually purchasing investments from a third party. The third party also has a management expense ratio, or MAR, associated with the product, meaning that they are charging Raiz, who are then passing that on to you as well. So that can vary based on the ETF product that you're investing in. And if you're interested to find out exactly what that number is, you can see before that there was links to the products that they were investing in above. You can click on that and you can see exactly what the underlying issue fee is. Additionally, we've got a maintenance fee, which is $0 for account balances greater than 10,000, but is $2.50 per month of account balances of less than 10,000. So here we can sort of see it's the flip of the account fees, in the sense that you're paying $0 if you've got greater than 10,000, but you're paying $2.50 here, whereas you're paying 0.75% if you've got more than 10,000, but $0 if you're below 10,000 in regards to account fees. So something to keep in mind. If your balance is quite small, say less than $500, $2.50 per month percentage-wise is quite significant. So that's something to keep in mind when looking at this particular, Raiz as a platform as a whole. I guess one thing to note is, because this is a fixed cost, meaning it's not a percentage, it's important that you recognize how that can have an impact on your investment. If you have a smaller investment, if we're only talking about amounts less than 10,000 here, for example, $500, $2.50 as a percentage of 500 is significantly more than $2.50 of 8,000. So to try and minimize the impact that the maintenance fee is going to have on your balance below 10,000, the higher your balance closer to 10,000, the better off you're going to be. And so that's something to note, because if you only got $100 in the platform and they're charging you $2.50 per month, it may not be worth it, because the returns, which annually they're probably about 8 to 9% on average, will not outweigh the maintenance fee associated with that. So something to keep in mind, and I encourage you to look into that a bit further if you don't think you've got considerable capital to invest. Personally, I put in 10,000 because that made sense with me. If you can do somewhat similar, that might be a good opportunity, because that, from an investment standpoint, makes sense with the fees, because the annual returns are able to easily outweigh the account fees associated with an account of a balance of 10,000 or above. And so they've actually provided an example here of the total fees you can expect to pay on an account balance of 10,000 or more. So this is associated with their moderately aggressive portfolio. We can see that the total management cost for that particular account is 0.54% per annum, which is not huge, but definitely not as low as some of the other investment products available if you buy directly through the Australian Securities Exchange yourself. But it's definitely an easy way, and they've made it very accessible to access investment-based products. So I guess you're paying for convenience here. And if you are kind of a novice investor and you are just looking for an easy way to get exposure and start earning some interest on your money at a bit more of an aggressive state to the current interest rates, then this is probably a good starting point. So thanks so much for watching, guys. If you enjoyed the video, please give it a like. And also, if you want to see more content like this, feel free to subscribe. Overall thoughts are Raiz definitely offers a very robust and easily accessible platform for its users, providing a slick user interface and an easy way to get started with the stock market. I've personally had a very positive experience with them, being able to invest 2 years ago and see capital appreciation of around $2,000. So after all that, if Raiz seems like the right investment product for you, feel free to follow the link in the description and get started today. Cheers.